Hello everyone. So I'm so glad to be here with you. So regulation is a big trouble at the moment for the blockchain industry, but hopefully we can get some clarity today on what's next for regulation, how we can improve and really get mainstream with blockchain and Web3, and hopefully, onboard all the, institutions and all the company that wants to get into the blockchain and Web3 space. So I'm so glad to have you here with us today. If you would like maybe to start to introduce yourself, please.
Sure. Thank you very much. Welcome everyone who's been to Istanbul. I hope you enjoyed your journey and the conference here. This is Elçin, Karatay from Solak and Partners Law Firm. I'm the managing partner of the law firm, which basically serves technology firms. Great to meet you all.
Hi everyone, this is Esra Özdemir. First of all, welcome. I'm working as a financial auditor in EY Turkey, and also I have launched the blockchain desk over there, and I'm still leading it.
And my name is Burcak. I'm a lawyer admitted in New York and Istanbul. I've been practicing for about 25 years now, and 85% of our practice focuses on fintech. And we've done STOs, ICOs, fan token offerings around the globe, maybe more than 40. And also we are working with exchanges and other fintech services.
I'm so sorry for interrupt you. Really, I'm sorry, but I have to fix a mistake. Our moderator, one of our moderator, Nikita Sachdev, is here with us. Just let me have her on stage, please. Again, we are so sorry for this.
Check. Hello. Yeah. Okay, thanks guys. And sorry, I was here all the time, but I was just not found in front. So thank you. It's very nice to meet you guys.
Now you heard who we are, right?
Yeah, I did.
Okay.
I was here the whole time, but I think I just didn't flag myself. But yeah, thank you for your patience and apologies for that. So I know we were in the middle of introductions, so if we can just continue and then I'll introduce myself and then we'll go on to asking the questions.
Actually, we just finished, so please go ahead.
Okay, perfect. Well, very nice to meet everyone. My name is Nikita Sachdev. I'm the CEO and founder of Luna PR. We're a Web3 PR marketing agency headquartered in Dubai with offices in Miami, London, Singapore. I'm also the host of CNBC Arabia, and I produced the first ever Web3 show on CNBC Arabia, which hits 50 million homes, airs 3 times a week prime time. I'm also the owner of CoinTelegraph Middle East. We bought the franchise for the Middle East last year, and we've been trying to develop it for the Middle East and North Africa region. We have a small VC. We have a foundation that provides education for women around the world. Yeah, that basically sums us up. So the topic today is on regulation battles. And it's a very hot topic, of course, with everything that's happening in the SEC in the United States. I'm American, and I'm not happy with what's going on right now. So with that being said, let's start off with the topic, the most anticipated topic, the SEC versus the United States. Some of the major companies in crypto have been based out of the US. You have Coinbase over there, that was one of the first crypto unicorns, one of the first crypto companies to go public on the NASDAQ exchange. And all of a sudden, the US wants to hamper their growth, or not wants to hamper, the activities, their regulation is hampering their growth. So what's going on with the US? And what can we learn with the battle that the SEC is currently having with the crypto market?
I think I'm the first to start. Okay, that's great. So I'll have a very, very brief understanding of what I'm seeing. So I understand that this can be seen as something that is hindering the growth of technology. So what SEC is doing and how they are reaching these cases. But we also seen in this last couple of years that there has been a need for some kind of regulation through different scenarios like FTX. We also seen what SEC is saying from the start is we're not trying to say anything to the technology. What we're saying is there is a law, and this should apply to anyone else, whatever you're doing. So just saying that you are decentralized will not get you out of this rules that has already been applied for 70, 90 years, which have been time tested to protect the investor. So that is what they are looking after. But everyone here should also understand and see that this is not perfectly working in a decentralized world. So that's sure, and it's not very great for the technology firms, because you always see US as a market where technology grow. It's a very open market where there is not much regulatory perspective and rules as the EU. But the investor protection rules has been there for a long time, and they're not okay with giving that up just to create this technology. But I think they're now looking at it to find ways of how to do things better. But it's a really hard question to answer for sure, and I think my colleagues here will have just much more to say about this.
I totally agree with what Elçin says. There are some laws and regulations that you have to adopt. But over there, the counter-argument is it's decentralized world and you don't need it actually. But the problem is we're still not there. It's a process that we have to go through, and we have a road to walk. And at the end of that road is this decentralization. But since we are in the traditional world right now and we're trying to adapt to this decentralization logic, we have to walk through some steps. And throughout there, to be known and be used much more, you have to go through some adaptation processes, and that's where the regulation comes in. Because if you directly go to the decentralized world, we have all seen there are so many bad faith players over there, and you have to somehow protect the others remaining. So for that reason, we have to go with the regulation. And I'm most of the maximalists will kill me for this, but I am with the regulation, because I really think we need this right now, so that we can protect the investors, and also we have this decent infrastructure over there. And once we get there, the regulations will kill themselves, I believe. We won't need them anymore. So.
Exactly, and that's what they say about the world of Web3, like that we're not exactly ready to enter a fully decentralized world, and we're still in the Web 2.5 kind of era, because we've seen a lot of decentralized exchanges that kind of collapse, and then who do you speak to? Like, who do you go to? Where is there jurisdiction? Like, what legal action can you even take when something like that happens? So I agree with you. As much as some crypto enthusiasts might not like to hear it, it's kind of needed. But then where does, there's a fine line between regulation and innovation. So can regulation hamper innovation?
Yeah, over there, I look at this like that. Innovation always comes first, and the regulation comes behind it, because there's this innovation, and then you have to somehow shape it, but without innovation over there. So regulation always comes one step behind, and it adapts itself to the innovation, because it's a changing and dynamic world over here. Everything is coming new, and whatever is coming next, it's over there, sky is the limit. So you cannot put any limitations over there, or you cannot put it in like a jar and close the top and leave it like that. It's not like that. It's a dynamic process, so you have to go after it. And regarding the SEC question, over there, I believe there is this kind of like a little bit of stubbornness right now, but I think they will solve it out. At least we have to be patient until 2026, until Gensler's time is off, but hopefully it won't last that long.
Unless he gets kicked out. I know, there's been a lot of rumors on Gensler.
Yeah, so much.
And speaking of Gensler, I'm curious about your thoughts. So Gensler seems to be anti-crypto. And funny enough, ironically, he had applied to be an advisor in Binance. What are your thoughts? Do you think he's just a little bit bitter, like he has bad experience and wanted to get in, didn't get what he wanted, and now he's like anti-crypto?
I think there's a personal dilemma over there, because once before SEC, he was in MIT, and he was one of the supporters for crypto and this blockchain all this world. And after the denial from Binance, everything changed, and he's with Warren right now. And we know that Elizabeth Warren is a big no for this crypto environment. So I think there's some other dynamics that we don't know behind the curtain. So we'll see soon enough, I believe, over there, how it will go.
Yeah, it makes me sad. I really hope America continues being a little bit more forward-thinking on crypto.
Yeah.
What about you? What are your thoughts?
Yeah, my thoughts are that we shouldn't focus only on decentralization, because it's only one aspect of it. And regulations have always been a competitive edge for all the countries, all the jurisdictions. Actually, this started in Malta, as you know. And because Malta had a very comprehensive and detailed regulation, it has been the hub of the initial wave of exchanges and initial coin offerings. Soon enough, Switzerland caught up with the pace, and they have become the next big and actually exceeded even Malta. And after that, other countries in Europe followed the path. And in the US, the problem is, I think the federal institutions, the regulatory authorities, don't have really that much of a close relationship with each other to share certain information. For example, it is the Securities and Exchange Commission who is initiating the lawsuits against the exchanges and some token projects, but it is again the same Securities and Exchange Commission who lets Coinbase get listed on regular exchanges. On the other hand, now we are seeing a rising regulatory activity in Europe, like MiCA, markets in crypto assets in Europe, and VARA in the Gulf region in Dubai, in, let's say, Emirates. And actually, with those moves, they are trying to get a portion of a big chunk of fintech activity, and it works. This tells us that regulations are actually a competitive edge for the countries who know how to harness it in a way not to inhibit technology and investment. Because the people who are investing in Ripple, who are investing in BNS or other type of tokens, they are not investing just to appear at the General Assembly of Binance or General Assembly meeting of Ripple and to exercise their minority rights and sue their directors for fiduciary duty breaches. That's why in the US, I believe there is a dilemma between the federal and state regulatory authorities and an overreach of regulations to an extent to fall behind in competition vis-a-vis the other parts of the world.
That's a really good point. I mean, every jurisdiction has its own regulatory body, and they're not really sharing information. So one jurisdiction might have different rules and regulations, the other might have another. And it's interesting that you say that the same jurisdiction that even allows you to register or have a appearance in this nation is then kicking you out. So it's very conflicting. It's still very confusing. There's a lack of guidelines, and that's what Brian Armstrong was fighting about, right, with the SEC in court. It's interesting because I'm based in Dubai, and VARA issued a license to FTX before it collapsed, like months before it collapsed. It just goes to show that really no regulatory body is really 100% there yet. But what nation do you think is leading the regulatory race? And where do these large companies in the US, where are they looking to go? Because everyone's looking to leave. So what's the most attractive jurisdiction now for a digital asset company?
Yeah, I would like to start this time from this end of the panel,
yeah,
if you allow me. I think currently with MiCA, Europe is leading because MiCA seems to be, they have watched and learned. They have seen how US did a bad job in regulations and implementations of the regulations. And they have also seen how some other parts of the world suffered from lack of regulation and lack of understanding. And they have come up with a reasonable and evolving regulation, what we call as MiCA. And it is yet to be implemented, and some other parts and secondary legislation will follow. So I believe currently we can say that Europe is doing a good job on that. And I think Singapore and Korea are also doing a good job. Other than that, another important point I'd like to bring to everybody's attention is the misleading information provided by the companies to the regulatory authorities. They are giving false audit reports. They are buying banks just to issue reports saying that yes, they are holding on to some sort of security amounts which can cover at least a certain portion of their what they are exposed to. But at the end of the day, they are not. And FTX had the highest number of licenses that could be obtainable in the US and elsewhere, but it was the one, maybe it was the main reason what we are suffering from today.
Yeah, it ruined the whole market for us.
Exactly.
Terra.
So the short answer is Europe is doing a good job right now, but we will see what will happen after MiCA will be in force.
It's just crazy to think that all of a sudden proof of reserves was such an important aspect, right? That nobody really looked at before after FTX collapsed. But you know, this year has been the largest banking crisis since 2008. What about the proof of reserves for the banks? I feel like it just kind of goes both ways. Are the crypto regulatory bodies really, like, I mean, how established are regulatory bodies overall? It just makes you beg the question. Maybe this is a rhetorical question. You don't have to answer that. But yes, so what do you think? Where are a lot of companies, digital asset companies looking to move now? Where is a friendly jurisdiction?
I think there's a competition over there. For the last couple of months, it's the Gulf region, actually, because there's a highlight over there, and most of them are moving there. But over here, I will be a little bit Turkish, and I think Turkey should be one of the hubs over here because we have the potential over here, and we are preparing the regulation. It's nearly come to an end, and everybody who is working for the regulation is trying to make it like a friendly for all the innovation and having it as an incentive for people to come and build it over here, make it bigger over here, scale it over here. So I think Turkey will be in near future one of those highlighted countries. And within that, I also, about the regulation part, I agree with Burcak. MiCA was a very good step, but over there, there's so much way we have to go still. And MiCA was a nice first step, and there's still some more steps to go through. And at the back, behind the scenes, all the regulatory bodies are working for it. There are a couple of important highlights for this. For example, this shouldn't be like a country-based thing. For example, there was a recent report for Financial Stability Board. It was published on July. And over there, there was this highlight, which is, I think, very important. It says all of the regulatory bodies from the countries have to work together to have a draft at the top, to have a couple of rules that should apply to everywhere. But under that, every country, every single country should go through with their legislations and mix it up and create their own legislative framework. But at top, there should be some couple of rules that should be applying to all of them. This was one of the main highlights of that report, and I think it's important while working on the regulation. I also agree with US has done a bad job. And over there, I think it was not related with the regulation, but it was related a little bit with the fight of jurisdiction over there.
And personal battles.
It was personal and body battles, actually. SEC was saying I should look for those. The other body was saying, no, it's my area. And it created this conflict for everybody over there, from developers to all the people working for the regulation, from every aspect who are into the subject. That creates a really big mess. And now I think they're trying to clean up that mess. So I think in US, things will be solved in a little bit later, other than Europe.
Yeah, you know, when you were talking about all these kind of jurisdictions coming together and coming up with clear guidelines as one. So I think, if I'm not mistaken, the UAE has also done something like this. So you have ADGM in Abu Dhabi, you have VARA in Dubai, and you have now Ras Al Khaimah is also a big Emirates that's also coming up with a crypto framework. Then you have the mother of all of them called ESCA, which is coming out, which I think oversees the entire. I think this is quite a proactive step, and let's see. I mean, who knows who wins the regulation race? But I really like the forward-thinking kind of mentality that the UAE has. But what you were saying about MiCA is also very valid. MiCA has done an incredible job. However, Europe doesn't have even a fraction compared to Turkey in terms of crypto users, and I think that's what makes a huge difference. Turkey is in the top 15 nations of crypto users. That's amazing. That's a great job, you guys. I mean, Turkey is a very forward-thinking nation when it comes to crypto. And I believe it's something like 6 or 7% of the nation here holds cryptocurrency. So that's huge. And I think that's the first step, right? It's like when thinking of a regulatory framework, you first need to have the interest from the population in order to even think about adopting it. So any thoughts on regulatory frameworks that are friendly for digital asset companies?
So I actually have, and the connection was very meaningful for me. So when you, for example, you're not a blockchain company, how do you choose a jurisdiction to work in? You look at investors most of the times, where the investors at, what jurisdictions does investor feel comfortable in investing your company, and the second is regulatory regime for that technological development. However, when you come to the cryptocurrency and Web3 area, you almost always, if you have a token, touch the securities laws, and that is not based on the company, but it's more based on the user. So even if you choose a country to be in. For example, you choose UAE to have headquarters there. It doesn't matter. If you want to serve a Turkish customer, if you want to serve an EU customer, then you should also abide by their rules. So there is a difference there when you look at the blockchain area. And I think that is, this difference causes how we look at regulation and how we have to look at the jurisdictions. And I think that's why it's more important to have these kinds of global regulations, because even, again, if you're in the US and you want to serve EU clients, you still need to apply by that. So I believe EU making this a regulation, so there is a difference in European Union law. If you have a regulation, it's applicable directly to all EU countries. If you have a directive, they just give you the guideline and the countries can have everything to themselves. So this is a regulation. This means when this becomes applicable, it will be directly applicable in all EU states, which will give EU a very big boost, because if you have a company in one of the EU companies, now you can serve all EU customers. So that's a big power to have. I think US has a very big market in terms of user base. Again, so as long as you have the market, you'll have, even if the regulation is too hard, you'll have some startups going on there. But if US have some kind of regulation-friendly environment, yes, more companies will go there, and more technological base will be there. But I think this is, again, a fight for the user base. And Turkey, it's very interesting. This is one of the countries where we see nearly no regulation, unfortunately, but again, as Esra said, there will be some. But again, as this is a big country of users, this can also be a big hub. So there is a difference there, which I wanted to share. With the US, I'm very pro innovation, but I can also see where they're coming from, and they really need to change the law to have different perspectives on that. But a lot of the US lawyers are not happy with the decisions they're making, because they're also not comfortable with how these things are going. But again, I'm a lawyer who's also doing litigation, and have been involved with serious cases, for example, with FTX for some clients, and it's really, really hard to go on with that cases and litigate those without the rules. Sometimes you don't even know where you have to go and seek some remedy or something like that. And even if the there are different jurisdictions, FTX also chooses US to have Chapter 11 and have the whole process there. So that's really interesting to think too. So we say this is not great, but at least there are some established rules here. So this is a very complex question, I believe, but everywhere need to have some kind of regulation to promote this process for sure.
For sure, yeah. I mean, at the end of the day, we need to remember that cryptocurrencies have only been around for, since 2008, 2009, right? There was the first crypto. And think about like how much adoption has increased just in the last 5 years, if anything. So, the nations have had to work extra hard to come up with regulatory frameworks and guidelines, which in TradFi has taken them years and years and years to achieve. And all of a sudden it's like in 10 years, boom, what are the guidelines? And the other thing is that cryptocurrency has really encouraged globalization. All of a sudden, in TradFi, what you're saying about like these different jurisdictions, it's the same in traditional finance, right? Like, it's whenever you're trading U.S. stocks, there's a whole process you have to go through. If you're not a U.S. citizen, if you're an exchange that's overseas, it's the same process. But all of a sudden now, cryptocurrency is encouraging globalization at the same time. So maybe this will affect even traditional markets, the way traditional regulatory frameworks work. I want to talk more about the regulation here in Turkey, since we are in this beautiful country. I want to know, what does a future plan hold? I mean, how is, the guidelines seem a bit unclear. What is the scene like over here?
Sure. So basically, we are waiting for a new law which will mostly regulate the cryptocurrency exchanges in Turkey and how they will allow exchanges of these cryptocurrencies and some kind of commercial law that will also be included under that. But that is the law that we're waiting for. So we will not expect this law to solve every problem, but will solve the problems that we see around the world. But we cannot foresee when it will come, because there has been some changes, as you may see, with the election. So there has been some changes with the timelines, but we are waiting for it for very soon. We also have two different legislations, which I believe Burcak will also talk more about. But one is related to what we call MASAK, which is the AML KYC related regulatory body in Turkey. They have a law, so basically anyone who's providing cryptocurrency related services should already abide by the AML KYC procedure. So that's one piece of law. And there's one piece related to the payment, use of crypto tokens in payment. Unfortunately, that's not very helpful and innovative. It basically says you cannot use cryptocurrencies as payment processes. So these are the three pillars that we're looking at right now. But of course, general laws like contracts law, commercial laws applies. So, this is a very open book, let's say, white pages where you can do a lot of things, just being careful about this already happening laws. But again, this is a big market which I believe will open a lot of innovative ideas.
How does that work? So the law says you cannot use crypto for payments here, for direct or indirect payments, but crypto is still accepted everywhere. I've been walking down some streets and they're like, Bitcoin accepted here. So how does that work?
Yeah, that's a lot of controversy.
This is Istanbul.
Yes, that's a lot of controversy. So, I don't want to go very deep into the legal reasoning behind it, but there is a lot of questions around what is a payment. When you look at it, there is no definition of payment under the Turkish law, so you cannot actually understand what this article said in a legal nature. But what we understand as lawyers, and thinking about, this is a law that came from the Central Bank of Turkey. So what I read personally, so this is my personal view of that sentence, is saying that you cannot use it in payment systems. So for example, if you're providing a payment wallet, if you're issuing electronic money, you cannot use blockchain systems or cryptocurrencies to provide that kind of services. So it should not mean, you know, if I give you Bitcoin, you cannot sell me a dress. So that should not be what it has to be meant. However, there are some contradictory things that the then central bank has said, which was suggesting, you know, you cannot buy anything for Bitcoin, but, you know, us lawyers don't necessarily read that law as such. But I don't know, Burcak, if you have any other thoughts on this.
Shall we follow the order? Anyway, I think Turkey is in a good position right now. I just hope that regulation will not make it worse than lack of regulation. Because although Turkey doesn't have a regulation, I think so far exchanges and token projects have found it very friendly to operate in Turkey. And actually, if we compare the incidents in Turkey with other parts of the world, frauds, cyber resilience, and consumer complaints have been relatively lesser in Turkey. And this is because we lawyers always advise to adopt the best principles if they are doing a job in Turkey as well. Because if an exchange or if a token project who already has experience in regulated parts of the world apply the same principles and open a nodal account, which is an immune bank account, only for customer funds, then there's no problem. Central bank or MASAK or Securities and Exchange Commission of Turkey won't knock on your door and try to close you down. And what better thing in Turkey is, if you start operating in Turkey now, you can exercise your grandfathering rights after the law comes about. So it's the right time to enter into the Turkish markets. And the law, as Elçin said, doesn't bring anything drastically different from other parts of the world. I mean, we are not trying to discover the world once again, but there are certain prohibitions. My personal interpretation, after certain discussions with the central bank, with MASAK, and after certain government-related, how can I say, let's say, announcements, I would use extra precaution in making payments with crypto assets, to be honest. Because maybe we wish to interpret it the way Elçin wants to interpret it, but it is very risky to make payments with cryptocurrencies for services and goods. And besides, after we have discussed these issues over certain, how can I say, opportunities with ministries, none of the electronic trade companies, electronic commerce companies, and none of the digital business so far has issued a crypto payment process. None of them is issuing their own tokens, or none of them are accepting even Bitcoin, which can very well be actually categorized as a commodity. So that's why I am taking an extra precaution on that particular interpretation.
Mm-hmm. But hopefully in the future, merchants don't even need to know if you're using crypto.
Exactly.
Hopefully there'll be a technology where
of course,
links to your decentralized wallet, you pay, merchants get their fiat if they don't want crypto, all good.
Yeah.
And any thoughts on Turkey as a market overall? I know you already mentioned that you're very bullish on the nation.
100%, but on the other side, for the regulation, I think the question I get most is this: when is the regulation coming? Come on, come on! It's just people are so impatient about it, and it's about time, I believe. But the thing is, over there's this concept that we should really understand. You can think about the regulation like a spider web. And the regulation, the final draft of the writing, it's right in the middle of the spider web, just imagine it. And then there's all the web around, and it touches very different places. So this is why the regulation is so complicated, actually, because it touches to so many different, so much various areas that you can even, for example, let me start stating bullet by bullet. I will definitely forget at least five or six of them. So there's so many areas it's touching, and you have to be very careful in each and every one of those areas. So we are taking opinions from the sector, people that are working over there, all the lawyers, and then the regulatory bodies, many different aspects, and you have to come in one to be okay with that regulation. So it's a hard process. We are almost at the end right now. And also about this Turkish central bank regulation not using cryptos in the payment process, it's not like the Kuwait completely saying no. It has some other aspects that you can use, but it's just right now you cannot use it, as Burcak said, in payment systems, that's all. But other than that, there are so many works on that, and also with the regulation, there is this highlights topic right now, the custody services, and we know that almost all of the banks in Turkey who are operating in Turkey, they are working for the custody services, they are working on their infrastructures right now. All of the custody service providers are over here. If you go outside, just take a walk, you will see many of them over there, and there are some panelists from there. All of the banks are working on these, all the RFPs are coming and going around, all these works, and the infrastructure is coming. So we know that the regulation is soon to come, and we have to be prepared once it comes. So that's why we are talking all about these issues right now, and I believe it's going to be a friendly and nice regulation for Turkey. And we'll see the rest.
As you know, as you mentioned earlier, it takes a lot of moving parts in order for one nation to be successful. And it's not just the regulatory framework. It's having the right ecosystem, the VCs, the investors, the users. And Turkey has users. That's what a lot of nations is missing. So you can imagine once they do come out with a clear guideline, and it's great that they haven't shut it off, because there are a lot of nations like China, like Kuwait, who are like, nope, don't even talk to me about crypto. Once that happens, Turkey might be the next hot spot, next Silicon Valley of crypto, who knows?
I totally share your optimism here. We shouldn't forget that regulation means trust. The people need trust to invest, to entrust their money to somewhere or some accounts, and regulation is supposed to bring that to the table. But the implementation is also very important. If you implement it in a way that disturbs the trust itself, like in the US, because now the people are investing in the crypto, but because of the very regulation that should have inspired trust, now their investment became just junk. So I think Turkey has that opportunity. That's why I share all of your optimism here. Thank you very much for the opportunity.
Awesome. Well, time is up. Thank you so much for your expert advice on regulatory framework. It was certainly very insightful for me, and I'm sure the audience found a lot of insight from it too. If you guys want to speak to our panelists later, you can probably find them around. And thank you so much for your time.
Thank you.
Thank you.